welcome to the week ahead from ICM.com. So first we're going to start with talking about the key factors in the market or the movers that were affecting the market last week, though it was a short week since the US was on holiday, and then highlight the top economic events for the week and go over the MetaTrader 4 platform to discuss the latest price patterns. So it continues, the rise in coronavirus cases are still raising concerns for investors, at least for the current period, since we all know currently that there are a couple of vaccines that are nominated to put an end to this to the spread of the virus. So it's still all the headlines from about restrictions, lockdowns will impact the market, and all the positive headlines from vaccines and their efficacy will also impact the market. So so you better watch out carefully for any of these headlines. Lately we saw some reduction in restrictions to start in the Euro region, though the numbers there aren't as perfect as needed, especially in Germany. But still, this is just having a little bit of an impact, since most of the market is now optimistic about the vaccines, especially that there are some talks that the vaccines will be available in the market ahead of the coming Christmas. So this is just positive, and it's being clear in the market with the stocks rally and safe haven assets suffering a bit. Economic data, we had a series of economic data last week. Many economic data came out, among them the second reading of the third quarter GDP from the United States, which came out as the preliminary reading at 33.1%. Also, the manufacturing and services PMI, which showed progress in activity despite expectations. Now let's move forward to the top events. But currently, like one of the key topics also remains Brexit, and that the talks they're still going on. The EU negotiating team is still in London and will stay there for a couple of days in order to have more discussions in order to reach a deal. From the perspective also, there is the OPEC meeting taking place today. It's starting in a while, where OPEC producers, they will try to just do what the market needs in order to stabilize it. So if they believe they have to extend the current output cuts in order to stabilize the market and support the market, they will do so. If not, they're just gonna stick to the previous plan, which would add 1.9 million barrels starting next year to the markets. So it is gonna take some time to decide, especially that there are some countries that they raised their output during November. So this is just gonna be a bit of a headache for the committee to just decide on the next plan, and will definitely impact oil prices. Moving to the top economic indicators or releases this week, we started more with the Reserve Bank of Australia monetary policy meeting. There are no expectations for any rate changes. German unemployment change expected to rise by 8 in November, especially following the lockdowns. Manufacturing PMI from the Eurozone and the United Kingdom, no changes from the preliminary reading. Consumer price index for November, also month to month from the Eurozone, should be a key reading. Canadian GDP month on month for September, expectations to show a growth of 0.9%. The US manufacturing PMI also similar to preliminary reading 56.7. The Federal Reserve Chairman Jerome Powell will be testifying for 2 days on the CARES Act. So this is just definitely can impact the market. ISM manufacturing PMI for November expected to come out at 57.9 versus 59.3. So this drop could have an impact. However, a strong reading could just signal that the economic activity wasn't affected much by the recent spread, and this could just support risk sentiment. Also, the European Central Bank President Christine Lagarde will be speaking on the day. Moving to Wednesday, also we start from Australia with the first reading of the third quarter GDP expected to show a growth of only 2.5% versus a contraction of 7% in the second quarter. This is just a bit of a soft reading relative to other countries. We've seen some countries almost recovering more than witnessing a high growth, almost similar to the contraction that we witnessed during the second quarter. So this is just should be noticeable by traders. The Eurozone, also German retail sales expected to show an expansion by 1.2% in October. Unemployment rate for the Eurozone to tick slightly higher in October to 8.4 versus 8.3. On the day, also, we have the ADP non-farm employment change, which should give us some hint on the official figures, which would come out on Friday. Expectations of 400,000 jobs creation in November. Factory orders from the United States, also the second day testimony for Chairman Powell, and the crude oil inventories by US Energy Information Administration. On Thursday, we start also with the services PMI. Services PMI day from the Eurozone, United Kingdom. No changes to preliminary reading. Initial jobs claims to show a rise by 770,000, almost similar to previous reading of 778. We were back to high 700s, especially following the recent spread, which just this could just impose some risks and woes to investors' outlook. Services PMI also the preliminary similar to preliminary reading 57.7, while the ICM manufacturing PMI is expected to drop to 56 from 56.6 previously. Moving to Friday, we start also from Australia with the retail sales figures expected to show expansion of 1.6% in October. Construction PMI from the United Kingdom to drop to 52 from 53.1. Definitely the lockdown would have an impact on UK figures. Average hourly earnings, we move to the jobs report from the United States, which includes average hourly earnings, non-farm employment trade, non-farm payrolls, and the unemployment rate. So the average hourly earnings expected to rise by 0.1%. Non-farm payrolls to show that the US economy created 500,000 jobs in November, while the unemployment rate ticked lower to 6.8 from 6.9%. Also from Canada, the jobs report expected to show unemployment rate steady at 8.9, while employment change jumping 20,000. Now you can see the difference in unemployment rate. So previously, when was the beginning of a rebound, we started seeing huge drops in unemployment rate, but now we're just expecting slight ticks lower, which would show that to go back to 3.9%, 3.6%, which we were seeing earlier during this year, will take some really good time to be there again. Now let's move to the MetaTrader 4 platform to discuss the latest price patterns. We're seeing a lot happening in the market. Well, in general, we start with the euro dollar, which in general is still strong. And if you go to the weekly chart, you can see we're having 2 consecutive weeks, strong weeks, especially following last week's strong rally. On the daily chart, we see here a sideways move and then continuation higher. We're just aiming at 120 psychological level, which was also previously a key level here. While you can also just tackle a previous top. So if you go to the weekly chart, you can just highlight previous top of almost 2090, and also if you want to go to further extensions, you can just highlight the bottom, which was support zone in February, March 2018, which was almost near 122.10. So these are the key levels for the week for resistance. While we're going to go for some expectations on the downside or reversals. So first, we need to clear back below the trend line, combining these previous bottoms. So any move back below the trend line could just signal a weakness in the trend and maybe a bigger correction for the current trend. So you can set a couple of targets, but ahead of this, you can just also highlight as a target upside. You can use this trend line and just to draw a parallel line to it and just expect some retest to the upper side of the channel, which could come in near almost these previous levels. So this is for the euro dollar on a bullish scenario. On a bearish scenario, any drop back below the trend line could lead first to a retest towards 1920, which was previously a key top, and then lower towards 118 on the bigger picture and 117.50. So these are the key levels for the euro dollar. Moving to the British pound against the US dollar, you can see it's in the past couple of days. So we started with the daily chart. You can see it's a series of higher highs. However, during the past couple of days, we witnessed a bit of a rejection, especially this was a clear sideways move that were kept by 1.34 top, and we were able to find some support near this area here between 32.80 almost and 33.10. So this area was previously resistance a couple of times and then gave some support additionally during the past couple of dips lower. So watch out for any break back below because it could drag us lower to this area near almost 131 and then to a bigger extent lower towards almost 128.80, 129.20, which was key support area previously. If we want to highlight on a bullish higher numbers or a bullish scenario, you can just place the previous stop 34.85 and just go back to previous levels. Also here we have previously almost 135.15 was a key level, and then 136.63. So these are the key levels on the upside for the British pound against the United States dollar. The dollar against the Japanese yen still still a bit trading sideways inside the bigger candle that we had on Moderna's headlines. So this was the candle, the trading candle on the day where Moderna announced its vaccine, and we're still trading inside this range. So this is what you can just draw it. We're inside the bigger range, and now we have another range here that we're almost trading at. So we have a smaller range and a bigger range that we're trading at. So watch out for the breakout of the smaller range, because we could retest the boundaries of the bigger range. So this is for the dollar against the Japanese yen. The dollar against the Swiss franc, if we just erase these. So on the bigger picture, the dollar against the Swiss franc, we're just trading inside the bigger range, almost 92, 0.92 is the key area here, and below 0.9020 and 0.9. So this area here is just the key support area. So if we expect further weakness on the dollar ahead, we could just expect a drop below 0.9 again. You can just draw similar channel here, combining the previous stops. And just to draw a parallel line where you can just at least set a possible expectations. If you could expect the market to continue lower, so you could expect some a drop lower here towards 89.30 almost, and then a bounce back higher. The Australian dollar against the United States dollar. So we had this sideways movement here during last week, and then the market, earlier this month, and then the market was able to break above the 73.40. We had this almost ascending triangle here, 73.40, and it was clear. However, the break is still a bit shy. Investors are waiting the tone of the RBA. If they have a bit of a bullish tone or stronger than expected hawkish tone, this could just drive the prices higher again. However, on a pessimistic view, any drop back below 73.40 could trigger a bigger correction towards almost 72, 72.20, and then we could be heading to another reassessment to check where the prices could be going. On a bullish scenario, you can just go previously to the previous stops. You can see this level here, it's key level, where we're currently trading 73.85, 74.15. You can just highlight the previous. You can highlight the previous bottom as a resistance to come almost near 75, and then we can just highlight higher levels near 77, 70. Definitely, the RBA meeting would be key mover for the pair. New Zealand dollar against the United States dollar. Also, we need to use the weekly charts, as we're just trading at our highest levels since 2018. So we can just trigger a 70.60. It was a key reversal area here. So just mind how the market's gonna behave at this price range. While like we lack any clear resistance levels close to 270. So this is just, you can highlight the previous supports here, which could be turning into resistance near almost 71.70. So this could be becoming a resistance zone for the New Zealand dollar against the United States dollar. Well, you can see following this sideways move how the market was moving steeply higher. So watch out for any sharp drop lower. So you can see how the market moved almost 500 points without a clear correction or a strong correction. We just had this correction here, but it's still not very significant, since we definitely recovered back and then the market continued higher. So watch out for any break of this upside trend. On the first lower low, you could just witness any slight weakness in momentum, and this could trigger a bigger correction for the pair. So you can just highlight, if we want to go for key levels, you can either draw the Fibonacci retracement and set some levels, or you could just highlight the previous stops, mainly among them 69.14, 69.10, and almost 0.68. So this could be the coming support levels. Or if you're just looking for buying the dip and you expect the New Zealand dollar to continue higher, they could be good levels to rejoin the trend. The dollar against the Canadian dollar, just weaker across the board. We were trading on the smaller picture inside the channel. and we're currently trading lower than this channel. So we're just approaching the previous bottoms, which is also a key area here. So almost near 129, 129.20, which was the previous low. So watch out for any break lower. If we want to highlight some key levels, also it's a bit far away, which would drag us even lower towards almost 127.81, 28. So these could be the coming to support for the dollar against the Canadian dollar. Also, this pair could be impacted by any changes to or by the decisions of OPEC plus. So watch out for this. You can just also, if you're looking for reversals, definitely you need to watch for any break back above the trend line. We have one trend line and we have a steeper one. If you want to go to closer time frames, to shorter ones, you can just highlight this trend line here, which is a bit steeper. So this could give you the first signs of any reversal. So this is for the dollar against the Canadian dollar. Moving to gold, which is weak on the day. It's still dropping. We started the day on a bearish sentiment. Tried to retrace a little bit towards 1883, but it didn't succeed, and then market continued lower towards 77. But still, we're finding support near the previous stop, which was almost 1765, and it's close to which means it's a key area we're finding support at. If we want to go for a bigger extent and just dissect the price action that took place ahead of this 1765 top, we were having sideways movement inside this range, which was between 1670 and 1760. So as long as we're above this range, this could mean that we would be reverting higher, and the key level to break above would be 1847. I'm just going to go closer now in the time frames in order to have better expectations. But this is just on the bigger picture for the weekly chart. If we go for the hourly chart or the daily chart, so for the hourly chart, for any signs of reversal start above 1800, 1790 could be positive, and maybe we could be aimed to retest higher heights. You can just draw the trend line combining the previous tops, and maybe we could be retesting this trend line on the first pullback or the first rebound. So this is just for gold on a bullish scenario. On a bearish scenario, as I said, we shouldn't be dropping inside this range, since if we drop inside this range, we can just target some previous stops as resistance. 1747, 1740 could be the coming support, and then another one at 1705. So these could be the key levels on the downside if we were witnessing further bearishness on the bullion. Moving to silver, it's a bit dovish, but still better than gold, since it wasn't able to break below the previous bottom near almost 2160. However, any break below this previous bottom could drive us back to inside the range between 1890 and 2160, or even you can just go to 1960, 2160 at this $2 range. So we could be entering it and trading sideways, maybe sideways down, in order to find some support or a key bounce back higher. On a bullish scenario, we need to definitely move back higher above almost 2290. So you can just highlight these previous zones as key in order to be bullish again on silver. Moving to oil. So we were trading inside. We were highlighting last week the trend line. If you just draw, we were highlighting this trend line last week, and then the market emerged from the trend line. So if you just draw the parallel line from the previous top, you can just pick the perfect top that was reached. Everyone is waiting for OPEC to decide on their next trade. So we're inside this channel. We also have this this almost flag shape here that we are almost trading at. So on a bullish scenario from OPEC, this could just continue higher towards almost 47.30, 47.50, and even higher. While on a bearish scenario, we could just drop again to the previous top of almost 43.27, and then for a bigger correction to almost $40 per barrel, $40.30. So these could be the key levels on a bullish and a bearish scenario from OPEC. Moving to the Dow Jones, we're trading sideways. You can see following last week's rally, we had a bigger correction towards 61.8, and now we're just trading sideways inside the range. So if we just highlight the previous resistance near 30,000, you can see we got a retest to the 30,000. failure to break above it is just a weak signal, so watch out for it. As long as we stay below 30,000, it's exposed to further downside. You can just draw the trend line combining the previous bottoms, which would currently sit near 29,425. A break below it could lead to a bigger correction towards 29,000, 28,900. On a bullish scenario, a trade above 30,000 could lead us higher again towards 30,530 on the trend. This is all for today's session. I'd just like to remind you that all the information, news, analysis, and opinions mentioned in this week ahead, they're only for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument. And ICM doesn't provide any investment advice. So this is all for now. If you have any questions, please write them down. Perfect. I believe this is it for today. Thank you all for joining and wish you a safe trading week.